Dilip Bhat, Joint Managing Director at Prabhudas Lilladher, is now joining us. Dilip Bhat, firstly, a very good 2016 to you and your team. And secondly, I wanted your view on the ADAG pack. How is the ADAG pack looking? Do you think there is a lot of value over there, which finally investors have, started to recognize?
Let me start off by wishing you and all your viewers a very happy new year, and I'm sure that they would make a lot of money. I think coming to your question about the Anil Ambani group, one thing must be said to his credit, that he has been taking all the possible right steps in reducing the debt, and that is giving more and more confidence. Amongst all the groups which are so much steeped in debt, I think this is one group which really stands out, which is taking a very bold call in terms of liquidating the assets and selling off the assets in order to bring in the cash and reduce the debt. And I think this we are likely to see more of this in the coming days, in the coming months, more of this happening. And I think that itself has set off a tone of a kind of a re-rating for the group as such. And I think that possibly will continue as they go towards that direction.
Right. Do you think that, playing the debt story or playing the debt deleveraging story can be the theme going ahead? Because that's one name where investors have really not looked forward to. That's one name where really, anybody picking up debt, anybody doing huge capex has seen a very big derating. You think that can be the focus? The theme can change from quality to these names?
Sure. One more thing, what is going in favor of them is the sector in which they are present. I think that also in the coming months we are going to see more of action on those sectors, and especially when you compound it with the fact that you are going to reduce the debt, it makes it all the more attractive. Surely I think slightly on a broader basis, if you were to take on a macro basis, yes, I think any company going in for a debt reduction or moving in that direction, I mean convincing the investors that yes, this is what they want to do, I think will be rewarded very handsomely. I think GMR is another group which I find that they probably are in the process of trying to reduce risk, restructure their debts, as also try to unlock some of the values in some of the assets which they own. I think that theme is something which will get a very high recognition from the investors on a macro basis.
That is also a theme which investors have stayed away from. Is that another key reason for this sort of a shift?
Sorry, can you repeat that, please?
In the last 3-4 years, funds have essentially focused on free cash flow, dividend-paying companies, companies that have huge brands and continuously are generating similar sort of profitability with decent growth. So, do you think that investment style itself will change, which means that these companies can re-rate?
Sure. I think people will be closely watching that. One is, of course, these companies are probably are in the course of reducing the debt. And second, how is the new working capital cycle would look like on the incremental order book position. Now, whether the incremental order book also would have a very working capital intensive kind of scenario. So that is something which probably will not be liked by the market. So both the things will be looked after, your debt reduction as also what kind of receivables and what kind of working capital cycle you are going to have on the new orders, because that itself will determine your ROC and ROE.
Right. Anything from the ADAG pack that you like? Reliance Capital, Reliance Infra, these are traditional names which you would have looked at in history. Do you think that there is still value after the 50-60% sort of returns that we've already seen?
Well, I think they were beaten down so badly. So one way to look at it as what you said, that maybe they have gone a 50 or 60% from the bottom. But if I were to take just RCOM, I think in 2014, somewhere around July or August, it was around 140, it is still hovering around 80. I think most of the stocks from the top also would have come down pretty steeply. So I think the main thing is, having run up so much, whether they still have a good steam left, I think my own sense, my own assumption would be yes, there will be good amount of steam for the long-term investors. as the group really follows that course very rigorously and in a disciplined way.
Right. As far as aviation is concerned, that's another name which investors don't like. It has done very well in 2015. Going into 2016, it will add on to strength.
Very much. I think this is another sector where the tailwind is very much in favor of the sector. Of course, needless to say that the main worry of a low oil price has to some extent played out, or to a large extent played out, but the sustainable oil prices at these levels, or maybe slightly more here and there, should still provide a good support to the sector. But more important is the passenger load factor. I think that also what we have seen is in the in the lean season too, they had a very decent amount of occupancy out over there. So I think that itself is giving the confidence, and I think that possibly will continue. So I think this entire sector, led by of course Indigo and Jet, probably will continue to see more investments and moving in the northerly direction. And I think even SpiceJet should really spice it up.
Right. Any other names that probably you like, something which people don't like or is completely avoided? Anything of that sort that you like going into 2016? Maybe a sector also, if you feel something like a hotel or retail, which people have clearly forgotten. Any of such sectors do you think offer any value?
I think couple of things. I think more than sector, I would say something like Larsen & Toubro, which has come down from a high and trading close to its low. I think that's another company which probably should benefit. They have a very strong order book position, and the fears about the Middle East orders have really played out on the stock price very well. And if you were to give due credit to this government, and if we were to say, if this government understands something very clearly, and that is infra space, and that is where I think we will be seeing a lot of action from the government in the coming months. And I think Larsen & Toubro, given its size and given the quality of the balance sheet, is definitely well placed. So at the current 52-week, near to 52-week lows, I think it offers a good opportunity for any investor to really invest slightly on a longer term basis and really get a outperformance of the stock as compared to the markets.
Right. Any other infrastructure themes that you like? You mentioned GMR Infra, which could also be interesting. Any other themes in terms of infrastructure that you like? Maybe road, defense, anything that you're looking at?
Well, I think in the pack, with some of the ones which I mentioned, I think they are the ones particularly as far as the infra space is concerned.
Right. As far as the traditional FMCG pharma pack, which have been performing for the last 3-4 years, you think that's a pack which now, after the correction in 2015 or maybe late 2015, offers decent value?
Surely in the pharma space, I think though there has not been any great correction in Aurobindo Pharma, that's another stock which we like. I think that's a stock where the net profit is going to cross 2,000 crores in the current year, and that's a very sizable profit at that. And I think they will continue to grow at almost about 20 to 22% on the bottom line for next couple of years, having a ROE of around 35%. And I think it is still available within a very reasonable valuations at the moment. So that's a stock in the pharma space. I think that probably we like quite a bit. And I think coming to some other sectors, maybe something like Tata Motors is something which I think looks pretty interesting. Not just the JLR part, which I think should come back into reckoning very soon, because they also set up a plant in China, but also the fact that the commercial vehicles in the years to come will probably show very strong volume growth. So both should add up, and this is the stock, a blue chip, which is really available at near 52-week low. So it has a good chance of really outperforming the markets in a big way.
Right. Dilip, just 19 points higher for the Nifty. ADAG pack continues to rise, so names like Reliance Infrastructure, Reliance Capital, Reliance Communication, Reliance Power, all of them are looking particularly quite strong. Very, very strong gains for some of these names, particularly for Reliance Infra and Reliance Capital. It's looking very strong, 8.5 to about 6% higher. RCOM has also started to move up. It was up about 1%, I think, last we checked, and it's now up 3.5, closer to 91 odd levels. We were talking to Dilip Bhat. He's still with us. Dilip, what do you make of the primary markets, the recovery over there? You think primary markets, a lot of new IPOs expected to come into 2016. You think that a lot of money could be made from primary markets since the last 5-6 years? Again, it's been very limited and very limited to certain names that have come to the market.
Sure, two things I think that really stand out over here. One is that a lot of companies and the managements have realized that for the stock to do well, you have to leave something on the table for the investors to make money. And wherever something has been left, I think not only has the issue got oversubscribed, but post issue too, I think there has been a thumping kind of response that they have got. And second thing is very clear that most of these companies are reasonably okay in size, in the sense they are not too small, and they have a reasonably good models. So I think some more such companies are likely to hit the market very soon. And another thing which we have observed is that the FII's interest in some of these IPOs have been very good, which has been quite a departure from what we have seen in the past 4 to 5 years. So I think all this bodes very well, and I think I'm sure there's a lot of money still to be made in the coming IPOs. And I think it would be a good thing for the investors, small investors also, to focus on these. Of course, they get heavily oversubscribed and you get very less allotment, but still you can play that, and even post listing a select few, I think you can still buy.
Right, but do you think that listing, a lot of companies have stayed away from listing because of the markets, the response that they were getting? You think that itself will change? Because equity markets are meant to be, coming in with primary offers so that people can raise funds, they can, try and give returns to their shareholders. So do you think at least that fear will go away?
Sure, I think that fear is gradually receding. And what we can see is that a lot more companies are willing to tap this particular source. And if you see the kind of pipeline that we are talking about in the coming few months, I think that itself speaks about the confidence that the managements have in the markets. And of course, I think the investors' appetite can get whetted only if you have some of these new issues which can be lapped up by them, instead of they just chasing a few good stocks of the existing market where the P's run very astronomically very high. So I think yes, of course, it is a very good opportunity both for the investors as well as for the managements.
Right. As far as the mid-cap space is concerned, the re-rating over there because of the fund flows which have been very strong with DIIs, you think that will continue, or this year even large cap valuations are looking good and they can also perform very well?
Yeah, I think you have summed it up very well. I think with FIs being in the sell mode, they largely own the big cap stock, so that's why we have seen them getting out, and as a result the stock price falling. And we have seen that's why the action has shifted to the B group and the mid caps, also supported by the DIIs. But I think we have to be very careful in this, because the common mistake that all of us make is 2 or 3 quarter results or 1 year good results is extrapolated into that these kind of results will be sustainable for next couple of years. So I think that's a mistake. And second, the challenge always, as we have seen for the mid-cap companies, is the management bandwidth. And most of them, I think, suffer very badly on that account. And as a result, we find that almost 7 out of 10 mid-caps fall off the cliff because they are not able to cope up with the expansion or with the growth. And then you have some problem coming by way of the environment. And I think they really go down the drain. So I think that challenge will always remain for the investors, how to identify a few who really meet some of these parameters if they have to really stick on to them for a long term.
Right. You also have, seen retail desk earlier. Can you just talk to us about the shift in the sentiment that we have seen in the retail investor? Most of the retail investors are trying to invest via mutual fund rather than investing directly. You think that's good? That's much more needed for the market rather than the retail investor trying to come in the market and then trying to take some positions? Is it much better off with the mutual fund players?
Very much. I think the retail investors have realized the pitfalls of really investing directly into the markets. I think if you are an HNI, of course, you do tend to invest directly into the markets, and also you go through mutual funds. But second thing what we have seen is the number of accounts of SIP that have been ballooning. That itself shows that the retail investors are gradually building that into that model, and I think the confidence is gradually growing for them. But I think the hybrid model will continue for some more time. The mutual fund route as well as the direct route, both will continue for some time to come, given the nature of our the retail investors.
Right. Just a word on the housing finance companies. They have done very well in the last 3-4 years. You think housing finance companies continue to be in a sweet spot?
Well, I think next 3 to 6 months will be something where they will be tested, because as the real estate really slows down, that is when I think this particular industry, which has not been tested so far, will come under close scrutiny. This is not to say that they are not good, but of course we are going to see that really be coming to the fore in the coming days, because everybody has been really doing very well on the housing finance side, especially the small ticket ones. But we have to see whether this real estate, the lull in real estate which we are seeing in the major metros, is it going to become contagious across the smaller towns? That nobody really has a great answer to that. But by and large, I think the housing finance companies are still doing very well. They're very good franchisee models, and I think their NIMs are also pretty stable, and if at all they're only going to increase in the coming days because of falling interest rates. And I think they also come out with a very good ROEs. So by and large they are good. The caveat being that next 3 to 6 months one should be a little more careful.
Right. Dilip, thank you so much for taking out time for us. Always a pleasure talking to you. That was Dilip Bhat of Prabhudas, Lilladher, talking about names as well as stocks that he likes.